The Reserve Bank of India's Monetary Policy Committee begins its 3-day meeting from September 29th to October 1st, 2025. The meeting will conclude with a press briefing by RBI Governor Sanjay Malhotra, who will announce the panel's decision on the repo rate along with other key policy measures. As per the RBI's FY26 schedule, this will mark the 4th MPC meeting of the year. The Reserve Bank of India's Monetary Policy Committee decision is likely to be a close call on the rate action, with economists split on their views on the rate cut and a pause amid concerns of growth. SBI Research in its report has said that there is a merit in a cutting rate in upcoming monetary policy, but will require a calibrated communication as post-June the bar for rate cut is indeed higher. The report added that a 25 basis point rate cut is best fit for this policy. SBI Research in its note said that there is no point in committing a type 2 error again by not cutting rates now. CPI inflation for FY27 is tracking at 4% or less, and with GST rationalization, October CPI could be closer to 1.1%, the lowest since 2004. Additionally, the report said that the timely cut would project RBI as a forward-looking central bank at a time when global yields are hardening. While as per a Bloomberg poll of 37 economists, 11 expect a status quo, while the rest expect a 25 basis point cut. Rohit Arora, CEO and co-founder of Biz2X and Biz2 Credit, said a 25 basis point cut at the upcoming MPC meeting would be a timely and practical step to support credit growth for MSMEs and strengthen the lending ecosystems across banks, NBFCs, and fintechs. Inflation has dropped sharply, with SBI Research projecting CPI near 1.1% in October, and the new GST rules implemented on September 22nd already reducing tax rates on many goods and services. Together, these factors give the RBI room to ease policy without risking price stability. While IDFC First Bank in its report said that the RBI will stay on pause this time, contending that the need for a rate cut will depend on how growth risks play out. The report added that from a real rates perspective, there is space to cut, but the need will depend on growth risks. The GST cut gives a 0.6 percentage point lift to GDP, but escalating US trade tensions could shave off as much as 1 percentage point. RBI is likely to wait for clarity post-festive season and cut in December if downside risks materialize. The central bank has reduced the repo rate by 100 basis points since February before hitting a pause in August.